Good evening, everyone. I'm just going to walk you through capital investments for North America, a bit of an analysis, and I'll give you some 2015 trends as well as an outlook with the projections that are likely to happen in terms of capital investment, both US and Canada. Now, this is only one perspective, and then as I always say when I make these presentations, you're more than welcome to go out to different sites, whether it's the banks, whether it's the Statistics Canada sites, or any U.S. government site to get their perspective on capital investments. Now, here's a little bit about myself. I'm a CPA CGA by trade. I focus on solutions, but I have a background in academia, industry, as well as working in IT. Now, I'm going to talk about the overall economic forecast because that's going to drive in terms of how companies are going to respond to their sales trends in terms of adding capacity. Talk a bit about machine tool orders. That shows you how automation's happening. Get a little bit more into debate around robotics. I'll talk about Class 8 truck sales, equipment manufacturing, and I'll get into capital spending both in Canada and the United States. When I look at economic growth, in a nutshell, we're in a period of sluggish growth. You'll see here in Canada, the US are not projected to grow significantly in 2016 as well as 2017. Now, machine tool orders now is a critical driver, and you see here in terms of what we're seeing here happen in terms of the challenges faced by business. They're not putting a lot of money back into purchasing equipment. Now, look, if you take a look at the chart, the far left hand side, 2012, 2011, we've seen a solid year of basically investments coming into machine and tool orders. But if you look at 2016, we're up a little bit in 2015, but we're about $1.3 billion investment down from where we were in basically in 2011, and even further down when you look at 2012. And that's significant to see that a lot of companies are not looking to invest in automation, including new tools. I like to focus on robotic sales because this is showing where the change or transformations happen in manufacturing in the US. We've seen significant investments in the robotic area, especially in automotive, but we're also seeing additional applications how robots are being used, and that's something to bear in mind. I use Class 8 truck sales quickly to give you an idea what's happening in distribution and resale. We've seen some peak periods of time for both 2015, 2016, where we saw a replacement of fleets. We're seeing a bit of a decline in 2016 and projected down, but we're still seeing about 200,000 units being sold for Class 8 sales. So it still shows a healthy distribution, but it shows that there's some capital investment with these distribution companies that are not investing as much as they did in the past. Equipment manufacturing, this shows you kind of the health of the food processing area. We're still seeing a pretty healthy investment by farmers in the ag sector. And we're still around 218,000 units, and that's pretty consistent where we've been for the last 3 or 4 years, so that's something to bear in mind. So we're seeing a healthy ag sector. Let's now talk about Canada, and all you have to do is look at the far left hand side of this chart and see that key sectors like manufacturing, mining, and gas are down significantly in terms of how they plan to spend money. Now, the key aspect that you're seeing here is you're seeing public investment at schools. You're looking at other infrastructure, public investment. That could be transit systems. That's where you're seeing some investments. Utilities are up. This is getting into renewable energy projects like wind and solar. Also, any sort of natural gas or hydroelectric plants, you're seeing that as part of the utility. Now, that being said, you're also seeing retail up. And that makes sense because we're seeing a lot more happen in distribution in terms of warehousing, more support for e-commerce. That means looking at the distribution hub and spoke approach. You're seeing that happen on the retail side, and a commitment, and that's what's happening there as well. If you look at the US sell, and durable goods is one of their measuring sticks, and their durable goods have struggled all year, and that's significant, telling you what's happening in terms of key industries like defense, machinery, fabricated products are all soft. Automotive is up, and it's supporting a solid automotive trends, and that's something we're seeing since this year and last year. We'll see actually probably a clawback this year, but it's still pretty healthy in terms of 17.5 million units that we should see happen in the US. Now, this gives you one perspective of capital investment. It also shows you a little bit that we have a lot of softness and a lot of slack in the economy. And we're also seeing indications where companies are not investing capital back into business. And that's critical because capital back into business also can impact productivity. And we've seen decreases in productivity over the past couple of years in both US and Canada, and that's critical because productivity drives performance. Driving performance drives companies' ability to compete and where they invest their dollars in terms of moving their business forward. Now this final slide shows you some key areas that you can check out. I've done some slides on trade and manufacturing sales that kind of give you an aspect of what's happening in terms of the exports as well as the manufacturing sector, and it's something to bear in mind as you're looking at trends. Thank you.